Well, it's Cooking Gumbo Nation. Hey, we got a great show planned for you today. Super excited. Going to be going live here in a few minutes. Going to be talking about as we head into May, right? Spring buying season's in full force. We're going to be talking about it's time to review the 10 commandments when applying for a mortgage. Seeing a lot of mistakes out there, so I want to make sure I take time to go over that with you. Cars, automobiles, auto loans. Going to talk about that. Everybody talks about rates on mortgages. We're going to talk about auto loans and what that does and how that affects your buying power and your ability to buy. And then Powell goes down fighting. So his last meeting was this week. So we'll talk about that and more. So stick around. Show's going to be starting shortly.
30 seconds.
All right.
Put a little extra in there as buffer, and I forgot to take it out. Sorry about
Oh,
that.
you good? What's cooking, Gumbo Nation? You're listening to Mortgage Gumbo with Dwayne Steiner right here on iHeartRadio. And I'm your host, Dwayne Steiner, the Gulf South Mortgage Authority. And this is your home show where for 11 plus years we've been providing education and options on what is or will be your largest investment and most valuable asset, your home. Hey, if you're new to the show, welcome. We're glad to have you with us. Think you're going to enjoy it. Maybe you'll high five that coworker or family member that's just out there promoting, like we talked about, what is your most valuable asset, your home, all things that have to do with that. Hey, if you want to join the show, 504-207-7600. That's also the home away from the show. We always got somebody on standby. Or you can shoot an email to info@mortgagegumbo.com. And hey, go check out go to YouTube, type in Mortgage Gumbo, become a subscriber. Check out all the Google reviews. Very easy to find. Google my name, Mortgage Gumbo, to show all that kind of fun stuff. We are out there and just trying to get as much information out to you as possible. On the show today, it's time. We're in the middle of the home buying season, and every now and then I got to rein this back in. And I literally could talk about this topic every single week from what I see. So we are going to discuss and go over today the 10 commandments when applying for a mortgage. We're going to get into that. We're going to discuss that and make sure that as we move forward, you understand what these things are as we go. Also, auto loans. Everybody's talking about mortgages and rates. Folks, I've got some data on what's going on with cars and auto loans and what this is, how much this affects you when you're buying a home. So I'm going to get into that. I'm going to give you some data. I want to help try to put some things into perspective for you as we move forward with that. So, hey, I don't know if I slept through summer, but wow, this little chilly weather, this rain brought through, a little crispness in the air. I like it. So I don't know if I missed summer, but it's nice. But should be nice. Last couple of days kind of poopy for the last weekend of Jazz Fest, but should be a good time for sure. Plan on heading out there tomorrow with Captain Charlie Thomason and his wife and, Fontenelle, the fantasy football guru. So we'll be doing that up tomorrow. So, hey, if you see us, make sure to say hi. No doubt about that. But Pow, Jeremy, Jer, went down fighting. it was his last Fed meeting this week, and look, this guy's a loser, man, and he's not going to go away. He's going to stay on, which it is his right to stay on as one of the board of governors or governor, whatever, it is. Just go away, man. But, he had his meeting on Wednesday, and it was his press conferences are painful. And the fact that what this guy has done, if you go back and look at since he took over, how much money now costs because of him and Yellen and their poor decisions, and the fact that what he says still holds water is nuts. And that's why I hope this new person coming in, Kevin Warsh, sticks to what he says he's going to do and getting rid of the press conferences, getting rid of the predictive, like, oh, we use data that's 50 years old still, but we're going to try and tell you what we think it may or may not do. And it sends things into a topsy-turvy. And then he even alludes to almost handing the new guy a poop sandwich, and this is what sent the markets kind of spiraling, was, oh, well, if we don't get control of this, then we can maybe see rates having to go up. Well, you've been in control of this. You've been the guy who is the decision maker. And then we saw things get even worse when he said his plans are to stay on. So it's almost like when you have that person you really don't like and they just don't go away, or that coworker that just isn't in it for the good of everybody else, and when you're rowing, they're in that, and they always that gossiper, like, oh, did you hear this? Or did you hear? Never bringing goodness to the table. Always trying to, I don't know what the terminology is, so I can try to stay on air, but, peeing in the Cheerios, so to speak, right? And so we'll see here. I just really thought, and I think a lot of people thought, but this is where we're at. This is where we're at from a political standpoint. I mean, it's an absolute stalemate right now. And it's frustrating, right? I know it is, regardless of what side you're on, right? Regardless if you're on the side I agree with or the other side, it's a stalemate right now. And at the end of the day, I truly think that, we're all just grunts. We get up, we do what we got to do, and make things happen. So we're going to keep rolling on. That's what we're going to do. And I can tell you what we're seeing, too. Application volume over the last couple weeks has absolutely skyrocketed. Skyrocketed. And I think what's happening now is we are in such a world of information is given to us immediately, right? Like, I mean, I can remember being in college when the war in the war first started in Afghanistan, all that kind of stuff, or whatever that other war, and you come home and you watch TV, and now everything is so just instant. And I think what happens is so many people are talking about it. Everybody becomes so numb to certain things. And when it first came out, listen, has the war had an effect on mortgage rates? Yes, absolutely. But why? Well, how does war affect that? And I had somebody ask me this, a young college person just 2 days ago that I met. And why? Why does that affect? Well, it's not the war per se, but it's the expenses. It's at what cost? What is it doing? Right? So you look at oil, it's inflationary. Look at where gas is. Look at where certain things are at. So it elevates everything because all the costs go up. Right? So people are spending money on those tax refunds and all that to now maybe put gas in their tanks. So they're in survival mode. They're not necessarily getting into savings bonds and mortgage bonds. So, and these are what's called, and when you look at gas prices going up, these are things that are called, it's inflationary. And as much as I talk about this, I still always, I'm going to wait for the Fed to cut rates. The Fed cutting rates has zero to do with mortgage rates. Rates follow inflation. And oil going up, those are inflationary things, right? When you start looking at that. So that is where it's at. No matter how often we come on here and go, hey, the Fed kept rates the same or the Fed cut, it has zero. Rates follow inflation. So keep that in mind, Gumbo Nation, right? So that's why when you go, well, how does this war? Look at what you're paying for gas. So that trickles down, right? Diesel's even higher. So your lettuce, your groceries, your tractors that's got to pull the corn, or the eggs don't just magically get to the market. Fertilizer, all these things, it's inflationary. So that's why you see where mortgage rates kind of following that, right? But they've sort of leveled out, nowhere near where we want it to be, nowhere near where I think they're going to be. But once this ends and we start to see the oil prices coming down, rates are going to follow, regardless of what the Fed does, regardless. And what Jerome's got to understand as well is what he's done is talks about inflation, but a lot of this stuff, what if it becomes a recessionary thing, right? And, well, then what? So then if it starts feeling like, okay, hey, are we heading into a recession? Well, it's kind of a catch-22. Because while we don't want that, from a mortgage standpoint, they'll drop rates. So to try to protect things. So there's a lot of factors going on out there. But what I can tell you is applications are way up, especially the last couple weeks. And I don't know if that's just due to whatever, pent up buyers. I think right now is an absolute amazing time, and everybody's winning. Sellers are winning, buyers are winning. And it is really a great time. And if as a buyer, I know if you're working with me, we're preparing you. We're helping you win those offers. Now, some of you have got to understand, and I get it. Hey, if you're paying a little bit of an elevated rate, you want turnkey. I get it. I totally understand that. But what do we got to make sure, too, what are we asking for? We had a deal this week that was on the cusp of being lost because they wanted a dishwasher replaced. It becomes a battle royal and over a dishwasher. So let's be a little realistic on some of this stuff. Let's make sure. And we also got to make sure we talk about, we recommend, we don't require these inspection reports. Folks, I've talked about this. You got to make sure you read those and look through those. And maybe, hey, if you know somebody that's an have somebody else look at it. But, and I'm not saying maybe sometimes there's a little something there, but you can't get an inspection report and go back to the seller, and this past week had 40-something things they wanted fixed. Like, what are you doing? What are you doing? Right? Like, we gotta kind of be smart here. So the seller said, hey, wish you the best. Wish you the best. So there's a lot going on. But again, it's a good time for both because if the house is priced right, it's moving. And the buyers right now want to buy. They've been waiting. And now folks are understanding, you know what? And they're hearing, and it's because of you, Gumbo Nation. Any loan that I have, I'm not going to have it for the next 30 years regardless. So we'll talk about that and more, and auto loans on the other side of the break. So farewell, Powell, kind of, sort of. And just Good riddance. Good riddance. All right, you're listening to Mortgage Gumbo with Dwayne Stein right here on iHeartRadio. Don't go anywhere, so we'll find you on the other side of the break. We're going to talk about auto loans, what kind of effect that is having. You're listening to Mortgage Gumbo with Dwayne Stein on iHeartRadio. Welcome back. Mortgage Gumbo with Dwayne Stein. Hey, if you want to join the show, 504-207-7600. Always got somebody on standby. Or you can shoot an email to info@mortgagegumbo.com. Hey, I'm a home wealth advisor. I help you, whether it's purchasing, refinancing, construction, reverse mortgages, you name it. I'm the guy to help. Hey, go out there, and if somebody says, hey, you just let them know, hey, I got a guy, and send them over. Y'all do an amazing job of that, Gumbo Nation. That's why, hey, I've been fortunate for 5+ years to be in the top 1% of all loan officers across the country. So the strong survive, and that's what we're here doing for you, sharing some of this goodness. So still to come on the show, we're going to be talking about the 10 Commandments when applying for a mortgage. You do not want to miss this, but I get it if you're driving or you're rocking and rolling and just, you know what you do? Shoot me an email to info@mortgagegumbo.com and just in the subject line, put 10 Commandments. Or even better, go to mortgagegumbo.com, click on resources, and print you out a copy. This is nothing like, I should have patented this about 20 years ago, 25 years ago when I came up with this stuff here, but it's good stuff. So we'll still got that to come. But I want to discuss auto loans, and the reason I bring this up is I'm seeing it. Just like I see the student loans and the negative impact of student loans for those folks who unfortunately thought they're going to get rid of it, they're going to waive it, I'm not going to make my payment. Well, auto loans, it's a whole different ball game. And I get with mortgages, right? It's all about rate. But is it about that when it comes to auto loans? And I want to share some factoids with you here. The average new car note is between $730 and $800 a month. The average used car is between $500 and $550 a month. So let's just take the low end. Over $700. Over $500 for a used car. And here's a staggering number that has been in play for 3+ years. 20% of new car loans. That's 1 in 5, 20%, folks. 1 in 5, 2 in 10, 20 out of 100, to make it easy. Have a auto payment of over $1,000. So I always find it interesting when someone comes to me and goes, listen, I need my payment to be around $1,200 for this house, and they've got a $950 auto loan. And according to Bankrate, the average rate on an automobile is between 6.75 and 7%. That's higher than about 95% of the mortgages that I'm doing right now. And it's a depreciating asset. And according to Edmunds, 3 in 10, 30% of auto loans have negative equity, or they're underwater by an average of $7,158. Well, how does that happen? Well, think about it. It's a depreciating asset. So you bought this vehicle, you put it on a 7-year term, it's no longer working, you got to go buy something else. You still owe a balance because what does that tell you? Think about it, 3 in 10. Can you imagine if 30% of homeowners, when they were trying to refinance their house, the appraisals were coming back short? Or they owned their house for 5+ years and the value did not go up? There'd be an upper. What would be the point? And what I'm seeing is on this is these are things when people get upset. And I had a client a couple weeks ago went and bought a $1,600 truck note. $1,600 for a truck note. And was mad at me because I could only get him approved for $200. I'm like, man, you're doing great. But your truck note's going to be higher than your mortgage payment. But listen to this on terms. 60 months, 25% of auto loans are 5 years. You know how many are under 4 years or 48 months, which used to be the norm? Less than 10%. 72 months, 61 months to 72 months, which is goofy. Just go to 7 years, say 72 months, is 45%. How many are at 73 months to 84 or 8 years? 25%. So you have almost 90% of your auto loans on a depreciating asset are being termed out to 5 to 7 years. And the reason I bring this up, Gumbo Nation, is, and we talk about this all the time, are you serious about buying a home? You got to, and I get it. I need a vehicle. I got to get to work. I understand. But keep things in perspective. Because you never hear people complaining. How many people going to the dealership? What's your rate? And here's what's crazy is So we've got 7 years, 6 to 7 years. You're looking at, right off the bat, is 70%. Yet people refinance their home on average every 7 years. So in that same time frame, they're refinancing to pay off debt because their house is a wealth building tool and is appreciating in value. And folks, that's average of 7 years. When people have 4%, 4.5%, 3% rates, that number is going to probably go down as what we see now, people refinancing that bought over the last couple years that were in the mid-sevens. So my point being is I know you need a vehicle, but my job on this show is to kind of just help you put things in perspective. And I bring this up because this is what I'm seeing. I'm seeing folks with $700, $800, $900 car payments, $1,600 car payments. But going, what's your rate? Or saying, well, I was really hoping my budget would be about, I didn't want to go over $1,500 a month. What an $800 car note they have. So keep this in perspective. Every 10,000, every $50 is about $10,000 in home buying and purchasing power. So if you buy that new car at $700 versus buying the used car at $500, you got $200 to $250 there, right? A month. That costs you $50,000 in buying power for a home. So that monthly hit is costing you $50,000 at minimum on a home. So when you go, oh, really? I can't find nothing in this tax bracket. Or I can only afford $225. Well, can you refinance that car and get it lower? What are we looking at that we can do to kind of help out here to where you could buy more house? Very rarely does somebody go look at the $300,000 house and go, no, I like the features in the $250,000 house better. So again, I just want to help you keep things in perspective because Gumbo Nation, I'm bringing this up, and it's one of the reasons why we're going to be doing the 10 Commandments as well is these are the things I'm seeing with the auto stuff. And everybody still thinks of the auto, 0% financing or this or that. Well, yeah, over 72 months. It's kind of like student loans, right? With college costs getting out of control. It's the same thing with autos. They're going to just keep pushing. But, that nice car in the driveway of your rental unit, or now I'm a homeowner and I have things in line a little bit more perspective. Because I'm going to give you your buying power. That's why you come to me. That's why you come to me. But you've got to be careful on what that auto, because that's going to affect your overall buying power. All right, don't go anywhere. On the other side of the break, we're going to knock out Rate Watch, and we're going to get into the 10 Commandments when applying for a mortgage. Love this topic. Going to share them with you. Give you a little insight on each one of them. You're listening to Mortgage Gumbo with Dwayne Stein right here on iHeartRadio, 504-207-7600.
Freakazoid, come on and wind me out.
Welcome back.
I'll be a freakazoid.
That's a great tune there, no doubt about it. You're listening to Mortgage Gumbo with Dwayne Steiner right here on iHeartRadio 504-260-0995. Let's get into our weekly segment we like to call Rate Watch. Hey, Rate Watch this week's brought to you by TWFG. Give them a call, 985-951-2070. Just go to mortgagegumbo.com and go click on their tab there in resources. TWFG, Beatencoff Insurance, the queen of insurance. Jamie, the princess of policies. Rates are dropping in the homeowners market, Gumbo Nation. And look, what some people are doing, and I'm actually looking at it as well, is parlaying those savings that I'm making now off of my insurances, my homeowners, my business insurance and all that, and looking at maybe some other products, right? Maybe a life insurance product, right? They're not going to push, but here's what they're going to do. They're going to look at your quote, and they're going to look at the best opportunity for you. So you want to make sure. So go visit those guys. Go to BIEDINS at TWFG.com. Or just remember Mortgage Gumbo. Go over there, 985-951-2070. All right, 30-year. Last week, 6.32. Jerome Powell this week, 6.44. 15-year, 5.91 at 6.01. FHA stayed about the same, 5.98. Jumbo, 6.59. And VA, high-five right at 6% as well. That 10-year Treasury, it's what we don't like. It's what we do not like at all. Before the war, that 10-year Treasury was down to 4. We had it all the way down to 4.1. 4.0. Hey, and February 28th, literally Saturday we did the show. We went to war later that afternoon. It was down to 3.994. So that 10-year Treasury, like we talked about, that's following inflationary, right? Inflationary items. So, all right. Want to talk about the 10 commandments of getting a mortgage. And really this can apply to anything out there, but I want to go over these with you because it is very, very important when we review these things. And so let's get into it. The 10 commandments. Number 10. Oh, I like that. Nice job, JP. Nice stat. Thou shalt not change bank accounts. Listen, this can create a nightmare. You don't want to change bank accounts when you're in the middle or you're applying for a mortgage or when you've decided you're ready to do this, because you've got to make sure that it's more of a timing thing. But we don't want to have to, when I say creates a nightmare, then all of a sudden we're having to track money, right? Did we add someone? Right? Did we add fiance who's not going to be on the loan, but now fiance's on it? Well, how are you doing this type of loan where you say there's only one borrower, but we got a fiance on the bank account? Who is that? It can add a nightmare. And along those same lines, number 9. Thou shalt not move funds in or out of your bank account. Large deposits have to be sourced. I trust you, but the investor don't know you like I do. So when you're putting large deposits or mattress money, depending on the loan program, that seasoning can sometimes require 60 days. So we don't want you moving money in and out of different bank accounts. Like I said, you may move money from one account to another account with a whole nother name on it. So now we need to get them involved. They need to write a letter. So moving funds in and out is not a good thing. Or what you do is, and this is why I send this out to all my buyers, however, Maybe everybody doesn't read them like they should. Some of you know who I'm talking about. But call me. Hey, here's what I'm looking at doing. What do what happens here? Right? My job is to make sure that we want to simplify. We understand buying a home, refinancing, reverse mortgage. It's a stressful process, right? We get it. It's stressful thought. My job is to make the process simple. So just get with me first. All right, commandment number 8. Thou shalt not cosign on a loan or lease for anyone. This favor becomes your debt. For 30 years, I have stories upon stories. And on less than a handful, these things turn out good. Hey, what is this? What is this auto? Can you go over? I see you've got an auto. Oh, well, I co-signed for my aunt, or I co-signed for my brother. Okay. Well, did you know that it's 30 days past due and it's causing your credit to drop? Or did you know that as we talked about earlier, that $700 and something car payment? Well, but he makes the payments. Okay, can you show proof of that? Well, no, he gives me the cash and then I make the payment. That's now your debt. Well, they don't have credit, so I had to help them out. There's other ways to help them. Help them maybe be an authorized user. Help them get, but co-signing, never. With my 30 years of stories, does it end well. Number 7, thou shalt not let anyone pull your credit. Listen, this is what a bunch of shady people do. We get it. When you're looking at, we talk about this on credit all the time. When you're getting a mortgage, understand that, you're going to maybe shop around. You're going to look around and stuff. And when you're applying for a mortgage, it's a little different than an auto, right? The bureaus understand that you may have several pulls, so they take that all into consideration. But you've got a lot of people out there, oh, don't do this. Now, once you've decided on that lender, you don't want, we say don't let anyone pull your credit, hey, don't go out and looking at, do I want to get an auto loan or something like that? That's what we're alluding to there. Number 6. Just had this happen. Thou shalt not buy furniture. You're excited about your new house. You got all your measurements. We made it through inspections. Oh, and that I don't want to say newspaper article. I don't know if people read that anymore. You see that ad. 8 years, same as cash. Or, hey, it's no tax weekend. Folks, that's new debt. That could throw you out of a program, the loan program that you're getting. It could affect your rate. So what I tell everybody here is, I get it. If you're excited, just call me. You're trusting me with your most valuable asset. And if you've trusted me to help you, to be your home wealth advisor, now's not the time to not reach out to me and go, hey, should I do this or should I wait? I can tell you immediately if it's going to have an effect or not have an effect. So those new purchases like that, you've got to make sure that you are careful. So, hey, that's our first 5. We've got 5 commandments remaining. Don't go anywhere. We're going to go over these. And, hey, if by some chance you're sitting there and you're taking notes, don't worry about that. Shoot an email to info@mortgagegumbo.com, and inside just put in the subject line 10 Commandments. I'll send you a copy. Or better yet, go to the website everybody goes to, mortgagegumbo.com. Click on resources and print yourself a copy yourself. All right, don't go anywhere. We got 5 commandments remaining. You're listening to Mortgage Gumbo with Dwayne Stein right here on iHeartRadio. 504-207-7600.
Let me talk to him. Let me talk to him. Let it rain. Let me talk to him. Come on. Shut it out.
Man, this is a great song. The G Unit, who's now 20. This was like his favorite song growing up. So every time I hear it, I just got to listen to it because I could remember him dancing and shimmying right out of diapers. All right, we're talking about the 10 commandments of getting a mortgage. But I had a great question from Mark in Mandeville, and I want to cover this, and then we'll knock out the last 5 in a second here. Dwayne, I'm trying to explain to my son how credit expenses can impact how much he can afford. He has a great credit score, but what's the best way to explain this to him? Mark in Mandeville, great question. Just make sure your boy calls me when he's ready to buy. But the best way to explain this, Gumbo Nation, is when we're talking about debts and you got a great score, is DTI, or debt-to-income ratio. That's what we look at, and those are things that affect loan programs just like credit score does, right? But when you hear this and when you're trying to explain this, Mark or someone else, to how do expenses work, when you're trying to figure out what your buying power is, it's debt-to-income ratio, and there's 2 of them. You have what's called a front end and a back end. Your front end is your housing ratio. So that is anything that has to do with your house, not electric bills or anything like that, but that is your principal and interest, your taxes, and insurances. And hey, do you have homeowners dues, condo dues, things like that? That is what's called your front end ratio. And then you have your back end ratio. Well, what that is your number plus your other debts, credit cards, auto loans, student loans. And then when you add all those up, what is that percentage of your income is how you get that ratio. Okay? So if you've got $2,500 a month between your housing and you have $5,000 that you make a month, well, you're at 50% on your back end. Now, if your house is less than that, then you might be at 35% on your house. But when we're looking at it, outside of rural development, where it looks at your front end and back end to qualify, it's going to come back. It's always going to be your, we're going to let you know, hey, here's what your mortgage payment's going to be, because obviously that's important. But when we're qualifying you, we have to take all debts into account. So again, you have your front end or your housing ratio, and then you have your back end, which is everything. And just to repeat, your housing ratio is going to be your principal and interest, your taxes, insurance, flood, i.e., if you're in a flood zone, condo dues, homeowner association dues, that is going to be your housing ratio. That is where you go, all right, hey, all right, yep, I can afford that. Keep this in mind. At Mortgage Gumbo, we can't give you a loan you can't afford. But what you're willing to pay, and this is why people trust me, because I have this conversation. I understand. I'm not trying to push you to your limits. I understand that what you're willing to pay and what you can afford are two different things. So you have your front end, Mark, and then your back end is your housing plus any other debt. So great question, Mark. I hope I helped you out there, and then everyone else as well.
5 minutes.
Good question. All right. Number 5. Thou shalt not leave out debts on your application. Folks, just tell us. And people go, well, how can you leave debts out? Look, a lot of times, especially in the South, SBA loans, different things like that don't report, you got to let us know. Because when we go run these special property reports and all these back-end reports, we do it up front. But it can affect what your buying power is going to be. So, this here is now things have changed. So that commandment there, back in the olden days, it was like, oh, you didn't tell us. Now we pull at Mortgage Gumbo because we don't like surprises. We pull all that stuff up front. Number 4, thou shalt not spend money set aside for your closing. Folks, you're about to make the largest investment on your most valuable asset in your life. What are you doing? Now's not the time to do that. I've told a story a million times that I had somebody, this is years ago, 10 plus years ago. Had them approved, had everything. They had a brain fart, and they went and bought a wife. They used up their money to go buy a wife. And I'm like, well, what did you think you were going to come to closing? Well, he's like, well, I just got excited because, moving into a new neighborhood, and I wanted to have a spouse. So, folks, do not spend money that you have set aside for your closing. Number 3.
I have so many other questions about
We'll
that
get-
last one, but we don't have time.
We don't have, but we will get to that, absolutely. Thou shalt keep up all payments and not charge up cards. Folks, they now have what's called UDMs, undisclosed debt monitoring. And this is why I tell you, and I had this a couple weeks ago. Somebody went in to get their furniture. We get alerts on that. The tools now that we have to keep this in mind, we get alerts. So make sure that you're not charging up cards. You're not getting new cards, and you're making your payments, right? Because if by some chance you do any of these things and we've got to re-pull your credit and you maybe slipped up on something, well, that could be the difference of us being able to help you or not. So we want to avoid that at all costs. Number 2. Folks, we talked about this. Thou shalt not buy a vehicle. Look, I get it, but wait till after you're in the house. We talked about earlier, 20% of folks have a payment over $1,000. The average new car note is between $730 and $800. Used car, $500 to $550.
2 minutes, 2 minutes.
Be careful here, because this is something that it's a budget buster. You go all of a sudden and get a car, it is going to be a budget buster. And I told you the story a little bit earlier about the person that got the $1,600 truck note. Well, We had everything, and we needed to run new credit. And he got the new truck note. So he went from being able to afford almost a $400,000 house down to 200-something thousand, low 200s, because of that. It's a big deal. So just wait. Let's get in the Let's get in, get the keys, and then afterwards, hey, do what you got to do. And number 1, thou shalt not change jobs, become self-employed, quit your job, or retire. If you are working at a W-2 job and you quit because you get mad at the boss and you know
1 minute.
your value is more than what they are willing to do and you're going to go off on your own, 2 years, folks. If you all of a sudden, if you're getting a better offer to leave company A to go to company B, and you're in the process and we're in the middle of talking about this, let's have a chat because we may have to see 30 days of pay stubs. Or how do you get paid? It can have an effect that way. So please, do not decide once you're in the middle of applying for a mortgage to quit your jobs. That's just common sense, but there's a reason why it's number 1. We see it, especially here in the Gulf South, more often than not. All right, Gumbo Nation, enjoy the weekend. Go out, tell one person to check out MortgageGumbo.com. Go read the reviews. People don't lie, man. We're doing good things out here, and we want to help you. So go out and tell somebody, hey, you have a guy, MortgageGumbo.com. Till next week, Gumbo Nation, keep stirring the